Welcome to TradeTheMBA.com. This is John. This report is for the 30th of September. Well, and as we're about to begin, October should be quite interesting. Of course, as we pointed out, it would be a little tougher for bulls to keep pushing forward. Given that there are no short interests, there's going to be something that kind of convinces shorts that they have a chance to jump back in this. But, it's going to become pretty clear very quickly the inflation cycle that's going to come from it, which is going to be a bipolar situation for the market. One, it'll have to account for, but two, it'll have to question whether or not the economy is having difficulties, even though the Fed has said the economy's fine. There was no reason to cut 50 basis points, that everything was beautiful. They still did it anyway, which makes no sense given what we see in reality. The numbers that they may be pushing have not quite been so accurate, so to speak, but the market is like the headlines. But then they start looking at the numbers that come through from each of the companies, and it's not as good as they had hoped. From an NQ standpoint, you can see well below the 33 already from Magenta on the MBI, but still no real short activity. So again, it's one of those where bulls have to keep pushing forward to get anything to go anywhere. And if they can't make that happen, it doesn't go anywhere. Treasuries, of course, forcing everyone into the market. This yield is negative. So what's your advantage in being in treasuries at that particular stage? Not a whole lot. Oil was the alternative from a commodity, but they've been driving that down. Even though supplies are at record lows, it's going to be an interesting one. You give any geopolitical situations that are going on, you would think that the risk premium itself would be elevated, but at this particular case, right before an election, lots of interesting things happen. That's a big bonus for the euro, and of course, it's skyrocketing on that declining oil cost, simply because it's cheaper for them. They don't have to buy as many dollars. Where the U.S. is going to get the dollars to pay for the deficits, and that's going to come from the Fed, of course, and its balance sheet, and everyone will be watching how big that starts to balloon. From a gold standpoint, a little easing off. That won't last long because, again, at the end of the day, everyone's going to be buying gold simply because they can see the acceleration of the rate of depreciation of fiat currencies. Bitcoin in that had a nice boom, but a little bit of a pullback today with it, and you're going to get those back and forth. But overall, again, those are all going to be asset classes that are going to thrive in the coming inflationary environment. Same with ETH and that. They've been muted, which I think has actually been quite helpful for them overall. From 50K, you can see we started middle of the day with the sell signal, and that's just continued all the way through here into post-market. It's been kind of sketchy back and forth, even in the euro trade at this particular stage. So that's where you can see we're at right now. And most of the intraday action was down from Friday. So this is part of what we're going to get with this back and forth. So we'll just continue to play with what is. As always, anything relevant, I'll put on the Skype chat. Have a good one. Indicators are coming out, so be ready for them. Trade well.